My name is Kevin Bao. I'm a sophomore from the University of Southern California, and I will be the moderator today. Please allow me to introduce our guest today, Dean Garrett, who has recently joined USC as Dean of USC Marshall, Robert R. Dockson, Dean's Chair in Business Administration, and a Professor of Management and Organization. He is an expert in world politics, business, and the global economy, as well as on US-China relations. We're honored to have Dean Garrett today to discuss the opportunities and challenges of 2020 in light of the COVID-19 pandemic, including macroeconomic trends and trade war issues. Without further ado, let's get started. So in September, Yelp data showed 60% of business closures due to the coronavirus pandemic became permanent. You also posted on your LinkedIn account that the regions hit worst include San Francisco, New Orleans, and Honolulu. How important do you think small businesses are at a time when huge corporations seem to dominate so many industries?
Kevin, it's a great question, but let me just begin by saying ni hao to everybody who's on the call and xie to you and all of the organizers for putting this event together. I know the pandemic creates real challenges, but I also know it's given you a scale opportunity that you couldn't have had face to face. Your question about small business, let me answer it in the US context. Which is that you're right that if you look at things like the stock market, it's the massive tech firms that are clearly driving the market. But if you look at employment creation in the US, small and medium-sized enterprises have been incredibly important. And I think that's why a lot of the early government action in the pandemic was focused on trying to prop up small business. But as you pointed out, it hasn't worked. And if you ask why it hasn't worked, I think the answer is twofold. Small companies tend not to have a lot of cash on hand, and they also can't borrow. They can't float bonds. It's harder for them to get loans. So I think the real challenge now is, can you create financing vehicles for small business and for startups? And I actually think fintech has been pretty important here. So if you look at something like Square Capital, for example, you know about Square as a reader for small businesses to process transactions. But what Square is now doing is lending money back to the small businesses because they know a lot about them based on the transactions that they process. So I think that the challenge for small business has been credit. But the solution is likely to have a lot to do with fintech.
Thank you, Dean Garrett. Even with the help of these fintech companies, do you think small businesses like restaurants will ever recover and be able to compete with bigger chains or businesses? And what do you think this means for an economy that historically champions small businesses?
Yeah, I think the question there probably, it's certainly small versus large. And again, I think the problem that small businesses have is they just have much less access to credit. But it clearly also depends on sector. So if you ask a question about face-to-face restaurants, they're going to be challenged. There's no doubt about that. But what I've seen in Los Angeles is a lot of innovation on the food side. So how good is your app, your ordering app? How well can you dovetail with the delivery companies is clearly having an enormous impact on how viable you can stay in the food business. Now, that's not the same as having crammed restaurants. I expect we'll get back to having crowded restaurants, but let's say it's a year from now or 18 months, that's going to create a real credit trough for small business. And again, I think that's why the credit market and trying to create opportunities for small businesses to borrow effectively the way large businesses can is a big challenge.
Yeah, thank you so much. Let's transition to the responses by the US government, especially at the start to combat the closure of small businesses. Some of these major responses by the government and the Federal Reserve include the stimulus checks, the Paycheck Protection Program, also known as the PPP, and lowering the benchmark interest rate to near zero. If we were to rate the US government's and the Federal Reserve's response to COVID-19 from an economic perspective on a scale of 1 to 10, what would it be and why?
I think I'd probably give it about a 7, Kevin. So I do think that the early actions were strong and coordinated. So as you said, the US government sent a lot of money out to small businesses and to larger businesses that were going to protect employment. There was also supplemental, as you know, supplemental unemployment insurance, and the Federal Reserve cut interest rates aggressively. So that was all positive. The reason I wouldn't go higher than 7 is that I think the US does need another round of stimulus right now, and it's being held up not for economic reasons but for political reasons. It's because of the election season, not the underlying economic rationale. And the second thing I'd say that goes hand in hand with that is that the next big problem in the US is state governments are going to run out of money. And as you know, states provide a lot of services in the US. And I think the Republican Party, particularly the Republicans in the Senate, in the US Senate, don't want to bail out state governments because the big spending governments tend to be in Democratic states like California and New York. And so again, it's quite politicized. So early response pretty strong. I think the closer I give higher grade. The closer we've gotten to the election, the more political everything's become. And I think, unfortunately, that's got in the way of economically appropriate decision making.
Thank you, Dean Garrett. From a macroeconomic perspective, do you think the US or China will recover faster, considering the different political systems that we have in the two countries, and why?
Well, I think that the overall position right now, and I think this will be true for the next year or so, is that the virus will lead the economy rather than the other way around. So, we saw the growth numbers that came out of China back up to 5%. That's because the Chinese crackdown obviously was, the virus hit earlier in China. The crackdown was stringent. It was quite effective. But by the third quarter, the Chinese economy had come back obviously quite strongly. The US, it's going to be slower. Europe is going to be slower. I think we'll see a massive quarterly growth number for the US for the third quarter when it comes out. But of course, that's because the decline was so V-shaped. So I think that, I think because COVID is a much stronger lingering reality in the US and Europe than it is in China and much of Asia, we should expect that China will lead Asia back and I think become an even bigger driver of the global economy. And we were just saying before we started that I zoomed into a conference in Shanghai a couple of nights ago, and the auditorium in Shanghai was completely full. As you know, you can't do that in the US. Any kind of gathering is still impossible in the US, almost throughout the country. So I think that shows how far apart the US and China are on the virus. And I think that's just bound to have economic consequences for 6 months, 12 months, 18 months.
Yeah, that's really insightful and interesting. Going back to early 2020, the COVID-19 pandemic triggered a stock market sell-off that led to a 1,000-point drop in the S&P 500. But now the S&P 500 6-month return is about 30%. However, the unemployment rate, though it improved since the 15% peak, is still hovering at about 8%. Do you think the stock market accurately represents the state of the economy? If not, why do you think the stock market appears so detached from reality?
Yeah, so it's a very big question, and I guess I have two reactions. The first one is that the US stock market indices, NASDAQ, Dow Jones, S&P, etc., are increasingly driven by a small number of very large tech companies. And the tech companies have been doing very well. But if you can decompose the stock index, you'll see big parts of the US stock market that aren't performing very well at all. I mean, think about some obvious examples. Hotel companies, airlines, anybody who's in transit, anything that's in business. I think commercial real estate is another very challenged part of the US economy right now, and that'll continue. So the first thing to say, I think, is that the headline stock market index is being driven by the tiny handful of really big tech companies that have benefited so much from the pandemic. Probably Amazon above all, but it's not limited to Amazon. The second thing to say about the stock market is that if you're creditworthy, you can borrow unlimited money. And I think that, the people talk about the market being addicted to free cash. And I think there's a lot of truth to that. So it's the low interest rates. Just think about it from the standpoint of an investor versus a saver. If you're an investor, low interest rates are fantastic for you because you can just borrow money really, really cheaply. If you're an average person and you've got a bank savings account and now it's generating zero for you, your returns, your personal income isn't going up. So I think that simple idea that low interest rates are great for investors but bad for savers, is one indicator of why Main Street and Wall Street are diverging. I think they're both real, but the question is, it's always about who benefits. And President Trump has been talking a lot about the fact that Americans with retirement accounts really benefit from a strong stock market, and he's right about that. But if you look at who actually has sizable retirement accounts, it's still a pretty small percentage of the American population. So yeah, the market matters, it's real, but the dynamics of the stock market are just different from the dynamics of the real economy. You'd expect over time they're supposed to co-vary, but I think in this period, in an extraordinary crisis like this, and again with unprecedentedly low interest rates, the divergence makes some sense, and I think it's likely to be around for quite a while.
And what do you think are the long-term implications of this decoupling between Main Street and Wall Street, despite the differences within the indexes between the tech companies and other type of companies? And what do you think it would do to the growing economic inequality in the US?
Yeah, very good question. My overall view on the pandemic is that it's accelerating trends that were already there. And one of those trends was inequality in the US. Obviously, it's increased dramatically in the last 20 years, and there's evidence that it's increased even more during the pandemic. We've already talked about small businesses and access to capital. It looks like minority communities have done particularly badly with respect to unemployment in the crisis. So I do think inequality was already an enormous story in the US, and it's likely to become an even bigger one as a result of the pandemic. And I think that then maps very neatly onto American politics, which is, as you know, is incredibly polarized. And I don't think the polarization is going down in the crisis. And this is, I think this is an important point, that normally in a crisis, it brings countries together, it unifies them. Right now, the crisis is just another element of polarization in the US. And, I think people in China would be surprised by the fact that a seemingly simple issue like wearing a mask has become such a political thing in the US that, you have half the country not wanting to wear masks as a political symbol and half the country wanting to wear masks as a political symbol. And it's much less about, the public health benefits than it is about politics. And that's I think this is the polarization again. Polarization was already an enormous issue in the US. It's going to get bigger, and the pandemic is just exacerbating it.
Speaking of politics and political polarization, the Trump administration has repeatedly blamed China for the COVID-19 pandemic. Meanwhile, the U.S. trade deficit surged in July to more than $60 trillion, the highest level in 12 years. How do you think the economic fallout resulting from the COVID-19 pandemic will play into pre-existing trade war tensions? Do you think they will escalate, or will attention be diverted elsewhere?
Very big question, but let me just say that I think the monthly trade deficit was in billions, not trillions. So it was probably 60 billion, not 60 trillion.
Sorry about that.
No problem. We have a lot of zeros these days. I think there's something has happened in the last 2 years that has attracted very little attention, which is that the US-China trade deficit actually has come down on an annual basis by more than $100 billion. And that trend is continuing in 2020. But in terms of the US politics, the trade deficit isn't going down because the US is selling more products in China. It's going down because the US is importing less from China. So, when I look at the trade war, it was the trade deficit that President Trump used as the justification for the trade war. And if you believe that, and I don't, as you know, macroeconomically, the bilateral trade deficit doesn't matter very much. But as a political matter, it was extraordinarily important. When the trade deficit went to $450 billion, that's a big number. That trade deficit has come down, but US exports to China have not increased. And I think that's going to create an important decision for the US with respect to the stage one trade deal that is a 2-year deal where China's commitments to buy American products are measured by 2021, by 12 months from now. So I don't think China will be able to buy all of the products that are in the phase one trade deal, $200 billion in additional US exports to China. But over the 2 years of the trade deal, the trade deficit will probably have come down by about that much, $200 billion. So I think the next US administration will have an important decision to make, which is, it could go in one of two directions. The US could say China did not deliver on the phase one trade deal, and therefore we can impose new tariffs the way President Trump has suggested he might. But the other path would be to say we actually were concerned about bringing US-China trade more into balance, and that's happened. And so we should give China credit for that. So I think the politics of the trade deal, it's not going to happen this year. It's not going to happen in the election year, but next year, the new US administration will have this important decision. Do they understand? Do they say, listen, we understand that China was unable to deliver on phase one because of the pandemic? Or do they say China didn't deliver on phase one and we should reintroduce tariffs? I think that's going to be a very important thing to watch in 2021.
Yeah, definitely. I think we're all going to be watching how the trade war plays out in the next few years because it impacts so many of us. You posted on your LinkedIn account a few weeks ago that despite rising tensions with the US, foreign holdings of China RMB have doubled since 2016. Why is there an increasing trend? And how do you think COVID will affect this trend?
Yeah, interesting. Very interesting question. So, you would think from all the political rhetoric that American business was not interested in China. But that's not true. I think what a lot of American firms are trying to do is to fly under the political radar. So financial services understands just how important the Chinese market is. Asset management, wealth management are massive industries now, and the American players would like to be involved. The American semiconductor companies still want to sell into China despite all the political sensitivities. So I think, I actually think this is a big issue, that American multinational firms understand how important China is to them, but they choose not to make that case publicly. And as a result, the politics of US-China are all about trade deficit. When we know that the trade deficit probably from an economic standpoint doesn't matter so much, and that America benefits in three ways from China's rise. One is that Chinese savings lower interest rates in the US because China continues to buy a lot of American debt, including treasury bills. Second, the Chinese market is massively important for a lot of American companies. Companies as different as Starbucks, General Motors, Apple. They're in very different sectors, but the Chinese market really matters to them. And then the last point, which I think is probably the most important, but also the most difficult politically, is that American consumers benefit from production in China because costs are lower. And, again, if you think about the political debate in the US, it says exports are good because they create jobs and imports are bad because they destroy jobs. And, there's some evidence for that. But what we never say, even though it's true, is that imports are good because they lower prices for American consumers. And, that has been probably the biggest impact for the US and for most of the world from China's rise and its integration into the global economy. It's just been an incredibly effective and efficient producer of a large range of goods, and consumers all over the world have benefited from that. But, I'm not a politician, but if I stood up on a political stage and I said imports from China are good for Americans, I would be dismissed immediately as a crazy person, even though the economics tells you that that's true. So given all of that, I think that's why most of the big American multinationals want to do a lot of business in China. They want to make a lot of money in China. They just don't want to be very out there about it. They want to fly under the radar if they can. There are some exceptions to that. I've been impressed for a long time with how Tim Cook, the CEO of Apple, has talked about China, where he said that the reason that Apple devices are assembled in China is not because it's cheaper, but because it's better, because the tooling engineers in China are just higher quality. But Tim Cook is an exception there. And of course, I think he's got to say it because every Apple device still says designed in California, assembled in China, right? So Apple, China is a core part of the Apple story. That's less true for the narrative of a lot of other big companies in the US.
Thank you so much. And as you have talked about just now, given the importance of the Chinese market, do you think the US will continue a rather isolationist approach in the future, especially after realizing the fragility of its supply chain and its dependency on other countries, namely China? Because we see at the start of the pandemic, the US had to import many masks, drugs, and other necessary medical equipment from countries like China to make up for the shortages in the US.
Yeah, so that's the mask example, I think, is a fantastic one, because there are two concepts where supply chains are concerned, right? One is efficiency and the other is resilience. We're going to hear a lot more about resilient supply chains, securing the supply chain. So let's talk about masks. The US didn't have enough masks. Was that because the masks came from China? I don't think so. The reason the US didn't have masks is because the US didn't stockpile masks. So one reaction to the pandemic where personal protective equipment is concerned, and a lot of it, as you know, came from China, not just masks, would be, gee, we've now got to make that in America. But that'll be much more expensive and not very efficient. You know, what I would say is that, hey, let's still import it from China, but we should just have bigger stockpiles because, you know, we weren't anticipating a pandemic. Now we should be anticipating pandemics. So that's kind of supply chain and masks. But I think my worry right now is that this notion of decoupling the supply chain, the China-US supply chains, that was already evident before the pandemic is going to become more pronounced because people will say, see, if we rely on China, we're going to get into trouble. So that decoupling notion is a reality, and I'm worried about decoupling because I think it has two potentially very large costs. One is the efficiency loss. If the US reshores a lot of production and starts making things in the US, it's just going to be much more expensive and consumers are going to pay much higher price. But the second point, which for me is at least as important and about geopolitics, is I've always thought the notion of a China-US Cold War didn't make any sense precisely because of how integrated the Chinese and American economies were. You know, unlike the Soviet Union and the US in the real Cold War, which were two separate economies. Well, if we actually decouple the Chinese global economy and the American global economy, then you could have a Cold War because the two sides are no longer economically interdependent. So I think it's the economic interdependence between China and the US that has been a real force for stability in the world. And I worry that decoupling will have the consequence of making conflict more likely. And I just don't see that that's in anybody's interests.
Speaking of the interdependency of the two countries' economies, what do you think China and US can learn from each other from a business perspective, looking back at the COVID-19 pandemic?
Yeah, so I don't know, you know, on COVID, we could talk about managing the disease, but let me go in a different direction, which is to talk about 5G. So, as you know, the US is arguing that having Huawei in the 5G network is a national security risk to the United States. And, you know, there's not a lot of proof that Huawei has had backdoors or other things in its equipment, but it is true that the Chinese government reserves the right to be involved with Huawei when it wants to. Okay, so let's say that the US has some justification for being concerned about Huawei and its role in 5G. Okay, now let's look at what the alternative for the US is. There is no US 5G carrier, right? It's Nokia. If you don't use Huawei, the US is going to use Nokia or Ericsson, European technology, not American technology. And I think this, you know, to my mind, this is a really important issue for the US. As you know, the US thinks it's the most innovative economy in the world and that all great ideas come out of Silicon Valley. And obviously, Silicon Valley has been an incredible place. But what we forgot, I think, about Silicon Valley is that a lot of the core technology there came from government contracts. You know, the internet was first called DARPANet with a D, and the D in DARPA stands for defense. It was the US Defense Department that provided a lot of the funding that created the early internet stuff. After the end of the Cold War, the US government stopped investing in core R&D. And I think we see a consequence of that there's no US player in 5G, you know, one of the most important technologies, obviously, of the decade. Contrast that with China, where the Chinese government continues to invest in every advanced technology going, because they know that it's the core R&D investment that, great companies like, not only like Alibaba, Tencent, Baidu, but now, TikTok and others can take advantage of. And, when I look at Silicon Valley in the US, that's what Silicon Valley did too. They allowed government to make the core research investments, and then a lot of the innovation was done by the private sector. And I think that's a great model. But the US has gotten out of that core R&D business right now, and I think that's I think that's a major risk for the American economy.
Yeah, thank you so much. Earlier you talked about tech companies being major beneficiaries of the pandemic, and what do you think are some of the other major beneficiaries? And do you think the advantages that these industries gained will persist long into the near future?
So again, my overall view is that the pandemic is accelerating trends that were already there. So big tech was already dominant, and it's become more dominant. But if you think about, let me give you two other trends that I think go in completely opposite directions. One is that logistics is just going to become bigger and bigger business, because we're going to be, we're just going to do, as in China, we're going to do way more delivery to the home, and anticipating inventory and having warehouses close, and using robots in warehouses. That's going to become incredibly important. So that would say to me that a company like Amazon isn't only a tech company, it's a logistics company. So it gets a double benefit. It's not the only logistics company. If you think about a very successful private equity firm like Blackstone, Blackstone's been investing in logistics for 3 or 4 years, and warehouses, because they saw this coming even before the pandemic. So, warehouses sound really old economy, but I think they benefit from our desire to have lots of products delivered to our homes. If you think about a sector that's challenged right now, I talked about hotels and airlines, but let's talk about commercial real estate, right? There are empty office buildings all over Manhattan and Los Angeles and Chicago. And if a lot of firms now decide to do remote work for a very long period of time, which seems likely to me, again, more on the tech side than elsewhere, but I think remote work is going to become a reality. The whole business model of commercial real estate in the US is really challenged. These are let's say you've got a high quality building in the center of a major metropolitan area, but there are no tenants. What are you going to do? Right? I mean, this is a really big deal, I think. So with respect to the pandemic, again, I think it's accelerating trends, but it's not having one effect. You've really got to think pretty hard about what the industry is, and how it's going to be affected by the new trends. So logistics sounds pretty old economy, but I think it's going to boom. Commercial real estate, where all the big private equity players were involved, that sounds pretty sophisticated, but commercial real estate's going to be very challenged. I think you've got to look very much sector by sector.
For sure. Do you think that Chinese economy has a fundamental advantage recovering from the economy due to how digital everything is? From my experience living in China, everything is on your phone. You can ordering takeout is a much more prevalent part of the culture compared to the US. So do you think, just fundamentally speaking, given how in the US, people still very much like to go out in person to eat dinner, that the Chinese economy will be recovering faster because of this difference in culture?
Yeah, great question, Kevin. And I think no one in the US knows about Dianping and Meituan and those right? People used to call Dianping the Chinese Yelp, but it's like 10 times as big as Yelp. And Meituan obviously is doing extraordinary things now. Again, what I would say about this one is that the trends were there long before the crisis, right? So Alipay, WeChat Pay, as you know, fintech is so much more developed in China than it is in the US. Well, I don't know whether I don't know whether the technology is better, but the market penetration is clearly much bigger. And I also think, if you look at companies like Alibaba and Tencent, they're integrated end-to-end tech companies, whereas in the US, it tends to be more segmented. So I think Americans have tended to undervalue how good the Chinese tech companies already were because of the Chinese firewall, right? They'd say, well, these companies can't be any good because they're not subject to global competition. Well, yes, there's a firewall in China, but as you know, the Chinese market is unbelievably competitive. And the innovation, the innovations that Tencent and Ali and the other big players have done is extraordinary. And again, that was pre-COVID. But I think you're right that in general, Chinese society, the Chinese economy is just more digital than is the case in the US. In fact, I think the US will probably be the last country to give up cash money because of the importance of the tip culture in the US, and tips are in cash. And so, China was already more digital, and the pandemic is saying digital is safer. So yeah, it's an advantage.
Let's move on to a student question that we collected. How can Chinese international students prepare for the future, given that China and US will be the top two economies for many more years to come in the future?
Good question. One thing that I've really been struck by in the business school world is just how good the Chinese business schools already are. So I think for Chinese students, you've got a lot of choice right now. The US has been a preferred market. My native Australia, lots of Chinese students have gone to Australia. The same is true in Canada and the UK. There's a lot of international choice, but the quality of Chinese universities is so high. Now, I know it's really hard to get into Beida or Tsinghua, but I'm just struck by how good the business schools are in the major Chinese universities. Having said that, I think it's good for Chinese people to understand the US, and it's really good for Americans to understand China. And I think that higher education has played an incredibly important role in increasing understanding between the two countries. So I would be personally very sad if one consequence of everything that's gone on in the last few years is that American universities become less international. I think American universities have benefited enormously from international students, including Chinese students. We've benefited economically, but we've also benefited enormously in terms of cultural understanding. And so I certainly, as Dean of the Marshall School, which is, as you know, a very international school, as soon as the visa issues go away, as soon as travel issues go away, as soon as the virus goes away, I hope we can return to being just as global as we were before. And for obvious reasons, China just looms so large when you think about global higher education.
Yes. This is another student question that we have here. When a business enters the Chinese market, it needs to consider many political factors. As you mentioned, in the US, that is also becoming a case. What factors should a business look at when they're interested in doing business in the States?
Well, I think, look, the American market is big, it's diverse, but as the question indicated, the political obstacles for foreign investment have just gone up. And I think, if you're a Chinese investor, you've just got to be realistic about that. I mean, if you look at the foreign direct investment numbers, I think the Chinese investment in the US peaked in 2016, and it's dropped dramatically since then. Part of that was because some of the Chinese firms overextended, probably. Anbang was a famous case. HNA maybe as well, made some investments and then they sold them. So there were probably some corporate decisions in China about not investing as much in the US, but certainly the political climate matters. I think this is of course, I believe in trade, but I also think two-way investment is incredibly important. And so I hope we can get to a place where there'll be much more Chinese investment in the US. If you go back 30 years ago, after there were real economic tensions between the US and Japan, it was ultimately Japanese investment in the US that really mainstreamed Japan in America. The Americans now think that Toyota is an American car company because so many Toyota vehicles are made in the United States. So in the longer term, I think it's going to be incredibly important that there's a lot of Chinese investment in the US. In the short term, it's going to be more difficult. And the advice that, the advice that I would give to Chinese investors is don't think about buying existing assets. Think about greenfield sites and making new investments, because that's when people welcome foreign investment. Because if you build a new plant, you build a factory, you're creating employment, and that's what people are looking for. And there are examples of that. I mean, I know it's become very sort of more controversial, but Foxconn, the Taiwanese company that assembles all the Apple devices, was making a very big investment in a plant in Wisconsin, in the US, and that was very well received politically. But of course, then Foxconn had to face the reality that the factory that they could build in Wisconsin was just going to be more expensive than the factories that they have in southern China and in Chengdu now. I think that big investment is probably been scaled back now considerably. But I think greenfield site investment is just much easier to do than buying existing assets.
That's really interesting. I think all of us, especially Chinese international students, will watch closely how China will invest in the future, invest in the US in the near future, and how that will impact the economic power dynamic between the two countries. Well, I think that's all the time that we have today. It was a privilege to have such an informational and enlightening conversation with you today, Dean Garrett. We really appreciate you taking the time out of your busy schedule to be our guest and sharing your thoughts and insights. And of course, I will also like to thank our audience for being with us today. I hope everyone learned a lot during this Q&A session. And thank you so much again, and have a great weekend.
And thanks to you, Kevin. It was my real pleasure. Hope to see you on campus sometime soon.
Hope to see you too.